Good afternoon, everybody. It's Chris Robinson, Robinson at Marketing with today's post-close grandandlines.com. It's for the 17th day of June. We made it through Wednesday, Whippy Wednesday. Most of our action in the greens was overnight in the overnight markets. D's corn did finish up 6 1/4 cent at 448 and 3/4, almost on its high at 449 and a half. November beans finished up 2 3/4 at 1149 and a quarter. About 8 cents off its high though, 1158 a quarter. Very big retracements. If you look at the retracements, what does that mean? When you take the high and the low, and then how much we bounced. You take the high in November beans at 1214. You take the low 3 days ago, where we tested 1121. We've clawed back 38%. Now, is there going to be more? I don't know. Um, we'll have to wait and see, how we finish up. We do have the markets closed Friday because of the holiday, so tomorrow should be interesting. But 11:57, these levels are key. They can really help you make better trading decisions, better hedging decisions. I'd rather see you sell into a 40-cent rally than into a 90-cent sell-off, and that's what we had. Soybeans broke 90 cents, corn broke 80 cents, wheat broke $1 plus, and now we've recovered here in last 3 days. That's exactly why anybody that was working with me or working with probably any risk manager worth their salt, if you had puts on, that's when you want to roll them down because when the markets rally, the puts lose their value. That's really what it comes down to. And if you're a farmer or producer, you're always bet long. You really don't want to buy a put for 10 cents and sell it for $1. You want to buy it for 10 cents and have it go worthless because you want the market to go higher. So when the put options double or triple, you really need to get after it. And these markets are so volatile, sometimes you get, the opportunity's there, then 3 days later it's gone. So I've been doing this now for working with farmers and producers for close to 20 years. Prior to that, I spent 16 years on the floor of the Board of Trade. So actually, 16 years I've been doing working with farmers and producers since 2010. Prior to that, in the early 90s, I came out to Chicago and was a floor trader. I was not a broker. I did not start working with farmers and producers until 2010, once the floor closed. However, I've learned this in 15 years. The default reaction for most people is to wait and see. Well, we'll wait and see. We'll wait and see. That's fine. It's always a choice. Doing nothing is a choice. But when you have an option that doubles or triples, my experience has been you need to get after it and either give yourself some more time with it or give yourself some more money or both. And it's always a judgment call as to whether or not you roll stuff down. And my job as a risk manager is to tap you on the shoulder and say, hey, this is possible. Are you in or out? I'm not one of those people that says this is, you've got to do this now or the world's going to come to an end. We're going to get a lot more opportunities here in the next 6 months. We are halfway through the year. We obviously have just got punched in the face after a really good rally in March and May. It remains to be seen where we're going to be at harvest. I don't know. You don't know. Nobody knows. So we're going to manage our risk. We are going to keep our powder dry. We're going to look for opportunities to make better cash sales down the road. And that's really how you approach this. So for the day, D's corn up 6 1/4 cent, again 448 3/4. Novi beans up 2 3/4 cent, 1149 and a quarter. The wheat was had a good day. Chicago up 16 3/4 at 612. Same idea. We've clawed back quite a bit percentage wise. If you look at Chicago, I'm going to run the math here real quick, but a really nice recovery. People talked about the fact that the funds had gotten short 80,000 contracts. So if you can imagine being short 80,000 contracts for 42 cents, you'd have lost $160 million. Imagine explaining that to your spouse. And again, what's the level we've come to? 615, 616. That's 38% retracement. So we see these retracements time and time again. No, they are not perfect. People always want perfection. There's no perfection in this game, but they are levels that attract attention, and we try to use them to make better marketing decisions. That's really what it comes down to. But they are not perfect. If they were perfect, I would own the Pittsburgh Steelers. I'd own the Chicago Bulls. You know, you make so much money every time they were perfect. They are not perfect, but they are something that you need to watch. In the protein complex, fat cattle are challenging contract highs again. No two ways about it. We've rallied $15 since the fourth when we made our whipsaw low on the New World Screwworm announcement. It's, August fat cattle are bumping into 250. Tomorrow is going to be very, very interesting. We've got a cattle on feed coming out, and if you just look at the chart, I mean, we're at the top of the range. We've been up here before. We were here in April and failed. You know, is 250? Is it going to fail again, or are we going to open the door up to higher prices? I don't know. Not a bad place to have puts on here if you own animals. Okay, and if you are short futures here, there's no problem being short futures here. You may want to look at some cheap weekly calls to protect yourself if we do spike higher next week after the cattle on feed. August fat cattle up 50 cents. Same idea. We've had a tremendous rally, $35 since the low. The low on the 4th in August feeders was 336. Here we're here today, this morning at nearly 368. So great recovery, kind of stalling out here at 370. We'll see if that continues to be something we need to watch. And then the hogs. Turnaround day today, we'll see if it's for real or not. The hogs have just gotten absolutely decimated here. Slipped to 7-month lows recently. If you look at July finished lower on the day. It was the only one that was lower across the board. All the deferreds were higher, slightly higher. August was up $1.40. Dees was up nearly $1. Feb was up nearly $1. But again, they're all coming back from just absolutely getting a knockout blow, and hitting 7-month lows. We're back to where we were by and large in November of 2025. So again, roll your puts down. If you're selling animals into these markets and you want to re-own them in case we get a recovery rally, calls are very, very cheap. Nobody wants them when we're at 7-month lows. Everybody wants them when we're at 7-month highs. So on that note, you guys have a great night. RobinsonAgMarketing.com. I'll be sending out the letter tonight. If you want to get a look at my last webinar, call me, email me. It's about a 15-minute, really a classroom. I record it as a Zoom meeting and go through all the charts. Spend a little bit more time trying to explain to you what we're looking at here when we're looking for key levels. Bull or bear, you got to watch these levels. This is Chris. Have a great day.